Okay, so you got our timer there.
Yeah.
Yeah, okay.
No problem.
Good morning, everyone. Thanks for joining us. I'm Luke Bertozzi from CIBC's Mining Equity Research Team. I'm here with Darren Cooke, CEO of FireFly Metals. Thanks for joining us. We're going to keep this conversational and touch on developments at Greenbay, really thinking on project financing and some of the exploration prospects. And we'll have time for questions from the audience. So Darren, thanks for being here. For those in the audience less familiar with FireFly, can you give a brief introduction?
Yeah, well, we're a copper gold developer with our main project in Newfoundland in Canada. It's called the Greenbay Copper Gold Project, and it's probably one of the best emerging copper assets in Canada. It's got a rare combination of high grade and scale. You can probably tell by the accent that we are ASX listed, but we're also TSX listed. So our home is firmly in Canada. Most of our employees are here. And yeah, look, it's been a huge couple of years for us. We got this asset only 2.5 years ago. Taken the company from a $70 million market cap up to its present value of $1.5 billion. And that was achieved through a very deliberate strategy of growth, investing in the drill bit, looking at the economics of rescaling this operation. So, resetting the cost base, rebuilding a mill, looking at the potential of the ore body, setting up the infrastructure to match the deposit. And then, the third area that we're really doing a lot of work on at the moment is regional exploration, because we do believe that there is a fair chance that we're going to make another discovery out there.
Yeah, that's great. And so Greenbay, it was a previously operating mine, so brownfield, and my understanding is you acquired it out of bankruptcy?
Yeah, that's correct. And look, it was a very competitive process, and we did a lot of work on the asset during that due diligence process. And my background's with M&A with a company called Northern Star. Our board with Kevin Tomlinson, Steve Parsons and Mike Naylor have all been involved in M&A activity, and we did really comprehensive due diligence on it. And it was in bankruptcy, but the conclusion we really came to was there was nothing geologically wrong with this asset. It has a huge amount of potential, but a lot of the issues were lack of investment and lack of setting up the infrastructure in the right way to tackle the ore body.
I see. Yeah. I guess what are the kind of key changes and what can you kind of learn from the prior operator? What are you planning to do differently?
Yeah.
Changes to the corporate structure, streaming, things like that?
Well, the first benefit of the insolvency process, that we were able to get the asset unencumbered. So we were able to remove all the debt. We were able to remove all the stream that was on it. And that's critical because that stream was on gold. And in our current resource, we have 1.1 million ounces of gold as a byproduct, right? So to get that stream off really enhances the economics. And look, the other thing that we're able to do is get rid of the offtake agreement. So, being a high-grade copper producer with a clean concentrate is in very high demand at the moment globally from smelters. So the insolvency enabled us to do that. In terms of what we're going to be doing differently, look, one of the key issues previously was there was a real mismatch between the infrastructure and the ore body itself. So you've got a large-scale ore body, really high-grade ore body. When we bought it, it was a 40 million tonne resource. We now, in our first 2 years, and having done 130,000 metres of drilling, we've got that up to 80 million tonne resource. The mill they were using was not purpose-built. It was 40 kilometres away, and it was only 500,000 tonnes per annum capacity, so it would take 160 years to process that resource. The port they were using was 140 kilometres away by road. So how we're addressing that is we're going to be building a new mill on site to eliminate that haulage cost, and we now have access to a port that's only 6 kilometres away. So resetting the mining base and really changing the mining methods to a lower cost mining method that more suits the capacity of the mill.
Yeah, I see. So you're planning to put out a PEA shortly, like early in this year, but I guess with the kind of extension of the ore body, it's kind of found this higher grade zone causing you to rethink things. But can you give us a little bit of a teaser, just how you're thinking about this PEA in terms of things like throughput or metal price assumptions or Yeah, just anything you can share.
Yeah, so we've been working on the PEA for quite a while, and we've done a lot of work in the background. And look, one of the reasons we haven't put it out is because we are dual listed, and there are different rules on the ASX and the TSX as to what you include in mining studies. Like, not many people are aware that in Canada, in a PEA, you can have as much inferred as you want. In Australia, in the early stage studies, you have to have 70% measured and indicated in the resource. So hence, a lot of our conversion drilling last year was really focused to make sure that we could get the higher confidence resource into our study work. But what that's looking like at the moment, we're looking at, we started this process and we've got a pretty modest startup case of about 1.8 million tonnes per annum, so 4,800 tonnes per day. But we're rethinking that at the moment because we're finding more and more copper. As I mentioned before, we've got the resource up to 80 million tonnes, and we are actively looking at cases to expand that eventually beyond that 4,800 tonnes per annum. So yeah, and look, in terms of the commodity pricing, I think we'll keep it pretty conservative, probably a 3-year trailing or something like that. But as with any study, there'll be sensitivity tables in there, and with this, having copper at nearly $6 a pound and having gold at nearly $5,000 an ounce, obviously there's a lot of upside in commodity movement for this particular deposit.
Absolutely. So 4,800 tons per day for the initial. My understanding, you can kind of go through the provincial-only permitting process?
Correct.
Yeah, can you walk through a little bit that process and then what a future expansion could look like?
Yeah, so look, we've got the initial 1.8 million tonne per annum case. Yeah. It's already been released from its environmental assessment, which is amazing, and it really does speak to the commitment of both the Newfoundland government to support our project and the support of the community, because we could not have got released for our environmental assessment that quickly. I don't think anywhere in Canada has been released that quickly, and I mean that's the benefits of having a brownfields operation. And we are going to start construction of that project as per what has been submitted. But like I said, we're finding more and more copper, so we'd be negligent if we didn't look at other upscaled cases, and we'll tackle that permitting scenario as they arise if we choose to do that.
Now, I don't mean to get too far ahead of ourselves, but could you walk us through some sort of kind of conceptual timeline when you think you could have your feasibility study or general thinking around final investment decision?
Yeah. So look, like I said before, we've been doing a lot of work in the background. So look, the numbers that come out will not be a surprise to us. Everything we're doing at the moment is to a feasibility level, if you like, our metallurgical test work, all of our environmental work, our design, our costing. So, we'll come out with the PEA with various different scenarios for developing this project, and then we'll move fairly rapidly towards the feasibility and final investment decision before the end of the year at this stage.
Before the end of 2026?
Correct.
Wow.
Yep. That's what we're aiming for at the moment. So the PEA will come out mid-year, and then on the chosen scenario, we'll come out before the end of the year with the feasibility study.
Yeah, okay.
And look, that timeline might change if we do keep finding more copper and things vary. We want to make sure that we get the infrastructure right. And we're trying to go on the fly. We're still discovering more and more copper. It's getting bigger and bigger. And we want to make sure that we make the optimal investment decisions.
Yeah. Now, as you keep extending greenbay at depth, especially with some of that high grade zone, is that kind of, how are you thinking about like ramp versus shaft? I believe preliminary at the beginning it was going to be just a ramp, but is that kind of shifting your thinking at all, these results you're seeing? Yeah,
look, I think it's fair to say that it's definitely shifting that viewpoint. Got to remember, like, even though it's getting deeper, there's actually ore 200 metres below the surface. So the way I envisage this potentially working out is there will be a combination of truck haulage. Eventually we may require a shaft. But the great thing about that is we've already got the underground development to 900 metres below surface. It's a lot cheaper to do raise bores than shaft sink. And timeframes are not not really much of a pressure. So I think with the startup scenario, we'll likely see trucking dominant, but then as this operation gets bigger and bigger, it will transition to some sort of shaft.
Yeah, okay, that's exciting. Now, if you're talking about final investment decision by the end of the year, how are you approaching the project financing?
Yeah, so look, we're really waiting on the results of this study to really accelerate that. You can imagine that we're getting a lot of inbound interest from a lot of groups, because the reality is with copper assets at the moment, they're very rare. Very rare to get copper assets of this scale and this grade in a tier 1 jurisdiction. So there's a lot of non-dilutive ways to consider this for financing as well. We're getting a lot of inbound interest from offtake groups, that want to secure the concentrate, because it is a prime concentrate. It's up to 29% copper with no deleterious elements in it, and 96 to 98% recoveries. So you don't get much better than that. We're getting interest from sovereign credit export agencies that are offering to provide cheap financing and debt in order to secure the concentrate for their home smelters, because the reality of the global supply chain at the moment is that there is not enough copper concentrate to supply the smelters that are in operation. So we're in a prime position from that perspective. And then there can be the combination of traditional debt, equity. There's even options of bringing in a partner if we want, similar to what Hudbay did. So what we have at the moment is no shortage of options. What we do know is that we will not have a problem financing this and building this project. And once this PEA comes out, we'll really assess the various options and determine the best way forward to create value.
I see. Is it safe to assume that a stream will not be happening?
It is very safe to assume that.
Okay.
We still feel that we're going to discover a lot more copper and a lot more gold, and we do not want to limit the upside exposure for our shareholders.
Okay. So this incredible drilling success that you've been having, extending the ore body at depths, it's kind of shifted your priorities a little bit, and your PEA caused you to do these kind of trade-off studies.
Yep.
How are you thinking about drill priorities for 2026? Are you just turning this thing into Swiss cheese as best you can?
Well, no, we never turn things into Swiss cheese. There's always a lot of deliberate strategy that goes into our drilling. And look, what you can see in this particular slide that's on the screen now, it really does sum up our strategy to unlocking value from this particular deposit. Those pink lines that are on the screen show the historical resource limits. So the midsection line there is the resource when we bought it. The middle one is the resource that we put out in 2024. And then the bottom line is the resource where it sat at the end of 2025. So that's our 80 million tonnes at 2.2% copper equivalent. The key thing for unlocking the value for us from this particular aspect was to put that development drive that you can see in there that allowed us to position the rigs to drill it down plunge. And we've done 130,000 metres into those new resources of drilling. And with the recent equity raise that we've done, we're well funded. We've got another 100,000 metres of underground drilling planned. And that drilling will be a combination of growth, continuing to grow the resource, but also infilling the resource, de-risking it, getting as much into the measured and indicated category as we can. Those people that are familiar with the geological terms and everything, you can only convert measured and indicated into ore reserves, right? And in your feasibility studies. So we want to try and maximise the reserve that we come out with on this. So there will be infill drilling. What we will also be doing is some development and also some exploration drilling from underground, because as we drill, we've been focused on down plunge extensions, but there's still a lot of opportunity beneath this ore body and off to the flanks to discover more mineralisation. So our focus will be on a combination of growth. It'll be a combination of infill drilling and a combination of underground exploration.
I see. So you have a development crew in place where you actually do some lateral development
Correct.
for exploration drifts. Okay.
Yeah, we've got all the development we've done. We've done just over 2,000 metres of development since we've had the project, and that's all been done owner-operated with our hard-working mining crews in Newfoundland.
Yeah, must give you some pretty solid productivity and cost estimates for when you're thinking about actually putting a feasibility study out there.
Exactly, and it's also enabled us to enact some of our mining method changes and using a machine that looks like a jumbo to do ground support, for example, and some of those really subtle changes between the different way we do things in Australia and Canada. We've been able to implement some of those changes. It's almost been like a practice run for when we do get into development.
I see. So when it comes to labor, would you say it's all local at this point, or you know, operating a jumbo? I feel like it's a pretty niche skill. Do you have did you bring in an expat for training or anything like that? Or?
No, we didn't. And look, we're really blessed because all Canadians know that Newfoundlanders are all over Canada. In every mine you go to, there'll be a Newfoundlander. You know, and they're hardworking, they're very skilled, and you know, for a lot of those people, they just want to come home. And for example, when we recruited that mining team, we had to recruit 3 mining crews, like, you know, muckers, jumbo operators, bolters, all that sort of stuff. We had it recruited in a week, and I can tell you, you wouldn't have 3 mining crews recruited in Western Australia in a year in the current labour market over there. So there's a lot of benefits to operating locally and keeping it as local as we can in Newfoundland. The other point I'd make is my previous employer at Northern Star, we took over an asset in Alaska. I really began to question whether flooding it with expats is the right way to integrate an operation and restart it. So my preference is to work with the local crews as much as we can to get this thing off the ground.
I see. Do you imagine that the eventual mine will have a camp for some more specialized skills, though?
Yeah, absolutely. And we've got a camp out there now. And you know, remember when we go into construction, you know, we may have like 500-600 people involved in the construction, and the town of Bayvert only has a population of 1,200 people. So, you know, it's a pretty big ask to suddenly throw 600 people into the town. Of course, we're working with the local council and a lot of groups in the community to work on fast-tracking new accommodation and stuff like that. But we may eventually, we're definitely going to need a camp out at site.
I see. Are there any First Nations groups that could be potentially impacted by this project?
Yeah, no, look, there's no active First Nations groups with any claims over our areas. Yeah. So, you know, we through the consultation process for the environmental assessment, we went out as far as wide as we could on the island and really didn't get a lot of feedback from the First Nations groups. So we're not anticipating any issues there. But, you know, there are First Nations groups to the south of us on the island. And as usual, we're always interested in partnering with First Nations groups to assist with their business, but and their economic development, but at the moment there's no interested groups.
You don't expect to be required to sign an IBA or anything like that?
No, not at this point in time. And we will be signing economic agreements with the local community and the townships nearby, but we don't anticipate needing that with the First Nations groups at this point in time.
Yeah. Okay. I'm going to pause here for a minute. Was there any questions from the audience? Yeah, please go ahead.
Geology, but you know, higher up, a lot of the good grade was coming from the upper zone, and then I guess maybe unexpectedly they fused. And as you go down, and if you disaggregate the drilling you're getting from the upper and the fused part of the upper and lower zone, there's a lot of the grade still coming from the upper zone, and just how are those two zones behaving individually as an entity?
Yeah, so they're behaving actually quite nicely, and it's maintaining a very thick, consistent pipe-like consistency. We're still seeing an upper massive sulfide zone that does have very, very high grades. But what we're also seeing is that we're seeing slightly higher grades in the footwall bulk zone as well. So for those that aren't aware, there's 2 styles of mineralisation here. One is a massive sulfide, which contains the majority of the gold, and it's very high grade copper. And sitting beneath that, you've got a bulk zone where you've got stringers of copper veinlets that bulk out into something that's amenable to large-scale mining. So, for example, the deepest hole we've got into the system now that you can see on the screen, that was 49 metres true thickness at 6.1% copper equivalent. Now, that was made up from memory of about 14 metres at plus 10% copper equivalent. And then the bulk zone underneath it was between 3 and 5% copper, so still very, very healthy. Still continues at depth. We've done downhole EM, so it does look like it continues on. We've got a good conductive anomaly well in front of that deep drill hole that we've got. And there's no signs that it's stopping. You know, one of the, oh, sorry, Rubble. And look, one of the great things that we've found, as you can see on this particular slide that's on the screen now, is in that zone where it's sort of converging, we have a high-grade core, and the individual resource on that is about 20 million tonnes at a grade of 3.85% copper equivalent. So that is a world-class ore body on its own without the other 60 million tonnes that we have. So where that will be really important for us is when it comes to staging our startup and ramping up development. We've got this super high-grade core to focus on, which will enable us to bring forward payback, generate a lot of early cash flow. And you know, my vision is that eventually we become self-funding for any future expansions if we attack this high-grade core zone very quickly. So, you know, it's a great ore body, and it's getting better.
Yeah. So with the VMS zone and the lower stock, we're kind of converging. Does that give you a little bit more flexibility when it comes to having larger stopes that maybe encapsulate a portion of both those zones?
Yeah, and it makes the development less complicated because, you know, higher up in the mine there can be up to 100 metres between those various zones. So development's more spread out. Development access drives are longer, and as you go further down and you get more them together, it just means less lateral development required to extract the ore.
Okay. Was there any other questions on greenbay? Right on. Well, why don't we touch on Pickle Crow? So you have 70% of the Pickle Crow gold project located in Canada. I think there's about between 2.5 and 3 million ounces, 7-ish grams per ton. You were in the midst of seeing if there was a potential buyer or a spin out. Has there been any developments in that?
Yeah, there's been a lot of developments in the background, and you know, I think we've been saying for a while that, you know, it'll become very clear very shortly, and that is the case. So we've settled on a pathway forward. You know, obviously can't talk too much about the details, but the one thing I would say to our shareholders is that we're all shareholders in this company as well. We want to maximise the value for Pickle Crow. We really believe in that project, not just the resource that's there for future development, but there is a huge amount of exploration upside there. And obviously when we were playing around with this project, the gold price was sub $2,000 an ounce, and now it's nudging on $5,000 an ounce. We think there's a huge amount of value to unlock at Pickle Crow. So we're not going to give it away. We're going to make sure that the shareholders get value for it. Yeah. And there's various ways that we can do that outside of just a straight cash sale. We can put it into another vehicle. We could give those shares back to our current shareholders, and they can have a free hit at a gold company. So we're working through all those options. Yeah. We've settled on an option, and all of that will become clear in coming weeks. Yeah,
that's exciting. I can tell you just from seeing things like NGEX and G2, these companies that are doing spinouts, the market loves it anyways.
Yeah, and look, it gives us a lot of exposure to the upside because we still truly believe in that project, and we do truly believe in the upside. So, you know, what a spinout does for us is it allows us exposure to that.
Yeah, I see. And that would have, you'd bring in that situation, there would be a full new management team specifically focused on just the single asset, right?
100%. Okay. I mean, you got to remember a lot of the new funds and the investment into FireFly has come on the back of the copper asset. So, you know, you can see what a great asset this is, and it's going to take 100% of our focus to get this into production.
Yeah, okay. Why don't we just run through just some of the events and catalysts that we should be expecting in 2026?
Yeah, so on that topic, you'll see some resolution on Pickle Crow very shortly. So that'll be one of the major catalysts, and I think shareholders should be happy with the outcome of that. Internally, the way it's heading, it's looking reasonably good. Okay. We've got 9 drill rigs on site, so we've got 6 underground doing the infill and the extensional drilling and the underground exploration. So there'll be a lot of news flow from underground, and also, we've got 3 rigs on surface doing the regional exploration. So there'll be news flow coming on the regional exploration, which is a key part of our strategy, given the prospectivity of the area. We're looking at a resource update before the PEA comes out. So that'll really consolidate the amount of measured and indicated and hopefully increase it if the drilling goes to plan, which I have no reason to doubt that it will. And then as the year goes on, just moving in towards that feasibility study towards the end of the year. So a lot of catalysts and a lot of news flow coming out.
And the PEA, should we expect that? Is that like a mid-year or a Q3? Or?
It'll be mid-year.
Mid-year, okay.
Yeah, is what we're aiming for. But depending on how the drilling and the timing and what changes, but we're well on track at this point in time for mid-year.
Well, yeah, it's a lot of catalysts. And then I guess project financing could conceptually be an early 2027 thing or mid-27?
Yeah, and we'll work on that in the background. And we do like to come out with funding solutions when it comes time to pull the trigger on the project. So a lot of that work's going on in the background. Mike Naylor and Steve are pretty experienced in the financing areas. So I think it's well and truly in hand.
Yeah, that's great. Well, I'll open the floor to questions one last time. Okay. Well, thanks for joining us. It's been great. Why don't you wrap it up with a short pitch why people should buy FireFly today?
Why FireFly today? I mean, the key thing that I look at when I look at assets for business development is, okay, what's the jurisdiction like? What's the quality of the asset like? Is it geologically sound? And what's the time frames to production, and what's the capital expenditure, right? And what are the outlooks for the various commodities that you're involved in? So on the commodity, I think we've heard at this conference, there is no shortage of copper bulls at the moment, and as I've touched on in this talk, that's based around simple supply demand. You look at AI data centers, you look at fixing up the electric grids that are aging. You look at all the hybrid vehicles, the electrification of everything. There's not enough copper in the world to go around. And the reality is there's not enough new copper supply coming online. The porphyry deposits in South America are getting deeper. They're getting lower grade. To start a new one of them takes decades and billions of dollars. So what I see in FireFly is the right time, the right asset in the right location, tier 1 jurisdiction, great government support, relatively low capex to get this into production, given that we can leverage off the $250 million of infrastructure that's already been sunk into this project. And I think the grade stands out. The average grade of a porphyry is 0.4% copper and 0.3, 0.4 grams gold if you're lucky. We're sitting at 2.2% equivalent, so at 80 million tonnes, and growing, and it's still open. So that would be my pitch. We've still got a long way to go, a lot of upside to unlock, and near-term copper gold production.
Exciting. Well, thank you for joining us, and thanks everyone for attending.
Thank you.